Um, Welcome to today's Monday morning mortgage update. My name is Sean Wooland with Waterstone Mortgage here at the Wooland Mortgage team. And I'm not sure if you guys know this, but I have my own dedicated team. I have my own processor, my own loan officer assistant. My processor has their own assistant, and there's me. So I'm the actual only loan officer on my team, and I've got a great support staff. Each person on my team has over 25 years of experience. So you're never going to get a newbie when you working on your file when you send it my way. Don't know if you guys knew that or not, but just thought I'd share that with you. All right, so we're going to go ahead and get started. I'm going to keep my eye on the waiting room for people that are logging in here. So let's start with some news. So here's the breaking news. Breaking news. This is kind of the stuff that happened over the weekend and last week. Why isn't this working? There we go. Mortgage rates fall to lowest levels in 3 months. Well, it's only 3 months, but it's exciting. So we are excited that we have lower rates right now. They kind of went sideways. We'll go over that in just a little bit. And then Fannie Mae is actually piloting a new purchase program where they're going to be buying second mortgages. So as of right now, or previously to this, to get a second mortgage, you had to go to a portfolio lender because these loans are not sellable. There was no end user to buy them. But now Fannie Mae is actually piloting a program to start purchasing them to free up that world so that they're going to be readily available across the nation with everybody now. So super exciting for that. We'll see how that rolls out. And then home prices hit a high in May with a median existing home price of $419,300. Now that's nationwide, but that is a record high. So any of those doomsdayers out there that said the market was going to crash, now keep in mind, median home price is the average home that's selling. It's not the level of appreciation on all of the homes. It's the average home that's selling nationwide has increased, and that's at a record high. So that's exciting news. Now here's a little bit of a frustrating news article. Housing starts fell. Now, what that means is homes that are being started right now that have permits out and are starting to be built, it fell to a 4-year low. So that's not a good thing for inventory because we need that to be constantly, to be updating and growing with our population demand. But unfortunately, it's slowing down. So I guess a few people coming in here a little bit late. And then home builder confidence actually dipped to a 6-month low, which is strange because home builders are doing pretty well right now, but their confidence in the future is slipping. So very interesting stat. And then out of control spending. Gosh, yeah, that was early this morning. Hurt the bond market last week. And I want to go over that a little bit. We had jobless claims come in and it was higher than expected joblessness, which is good for mortgage rates. Remember that. So that day we were expecting rates to get better, actually got worse because the congressional budget came out, showed that the deficit of 2024, instead of 1.6, it's now estimated to be a $2 trillion deficit just for 2024. That is not a good thing because where does that $1 trillion sit? In treasuries, in bonds. So an oversaturated market will lead to higher interest rates. So that day, we were expecting rates to get better. We actually reversed all of our gains and ended up negative for the day because of the congressional budget being way over the deficit of. Now, this is a deficit, meaning this is $2 trillion more than we have. This is like we ran out of money. We had an American Express credit card with a $10,000 limit. Let's just up that to $20,000 limit. That's, in lay terms, what happened. And then they maxed it out. So interesting, but that does have an impact on mortgage rates. And then across the country, across the world, we have numerous central banking establishments start cutting their rates in June. So this is good news. The Swiss Bank, the European Central Bank, Canada, Mexico, Hungary, Czech Republic, Sweden, list goes on, have started cutting their federal funds rate. And that is a good sign. That means, will the US be next? Are we going to be here soon? I expect maybe September, we may see something. So fingers crossed, because all of the rest of the dominoes will start falling into place once we have the Fed start cutting the Fed funds rate. So we have a new product alert. So some of you saw this on Facebook. It's actually not a new product. It's a new product with a huge incentive now that's added to it as a bonus. So this new product alert, this is our zero down FHA loan. So now we already had a zero down loan, but what makes this special is that it's got a big, and I say large, very substantial down payment assistance assigned to it so that you can get up to 5% in concessions to pay for your down payment and closing costs. So on FHA, 3.5% down, you'll have 1.5% left over to pay closing costs on this. So it's available nationwide, except for Hawaii and New York. You get up to 5% down payment and closing costs. Only a 600 credit score minimum. So FHA usually 580 or higher. Actually, FHA doesn't have a credit score requirement, but these special programs do. So 600 is the minimum for this. And keep in mind, free FICO boost. Here's a story. I like stories. Last month, actually like last week, we closed. We had a customer that had a 550 credit score. They came to us, they didn't have any money. It was a young couple looking to buy their first home, and they were looking for solutions. Now we put them in the zero down FHA, but in order to get them there, we needed a 600 credit score. So if you go to www.ficoboost.com, you'll see it. It's a free program that I offer to boost your credit scores to get you ready to buy. So we took a 550 credit score, got them up to 605 or 610 where they needed to be, zero down. It was a fantastic loan. And guess what? They bought a manufactured home as well. So it's for manufactured homes, and I'll show you that in just a second. Boom, double wide manufactured homes are okay with this program. So for those of you in the Prescott area, outlining areas of the Phoenix metropolitan area, Tucson, all those areas that have manufactured housing, this you need to advertise to potential buyers, because manufactured homes, sorry, no single wides on this program, but manufactured homes, zero down, 600 credit score. Start looking for those buyers, guys, because it's a great program. Condos are also okay, but keep in mind they have to be FHA approved, and there's no income limit. Now, this is one of the factors on most first-time homebuyer programs that kills the opportunity for them to have that first-time homebuyer program, and that's income caps. Most programs have caps on the income, so you're not able to get a first-time homebuyer if you make a certain amount of money or more. So this program has no income caps or no income limits. Fantastic. And guess what else? This program, if it comes up here, is just for first-time homebuyers. No, it isn't. It's for everybody. So it's not a first-time homebuyer program. It's an anyone program. You do not have to be a first-time homebuyer for this program. It's literally for anyone. So if you were in a, let's just say a good story, in a relationship, got married, went through a nasty divorce, owned a home, then now you're trying to buy one on your own, but you just are not ready. You don't have the down payment. There was financially, the divorce was stressful on you financially. This is a way to get back in the game. So that's just a scenario that I ran into a couple weeks back, but great program. It's for anybody. You do not have to be a first-time home buyer. Now it is for primary residences only. You can't buy vacation homes with this or investment properties with this. This program is only for primary residents only. And we can close this program in 30 days or less. Everything's done in-house with us. It's a fantastic program. And I'm going to open it up for any questions on this program, because I'm sure there's quite a few. Any questions on this specific program? Don't be shy. I expect all of you to start marketing this to your database, because it's great for kids. It's great for young people. It's great for really anyone that has lower credit scores and needs down payment assistance. So great program. Keep that on your marketing tab in your brain to start marketing that program. Yes.
I have a question.
Absolutely.
So if you you said it's not just for first time home buyers.
Mhm.
So if I have someone I don't know living in Maricopa and they're moving to Surprise and they don't have an FHA because you can't have two
Mhm.
FHAs from what I understand,
Correct.
then they could get into the new home and then we sell their other house or
This
as long as
program,
income
good
works.
question. That's a really good question. They can sell that other house, but they're not allowed to keep it. You can only have one mortgage when you get this program. So
Okay,
you wouldn't be able to keep that other house and rent it. You would have to sell it.
gotcha. Okay.
Yeah. But yeah,
Question, Sean, in
yes,
the manufactured homes, I assume that those products have to be permanently secured on a base?
they do. It has to be fee simple, take title, own the dirt underneath, permanently secured through normal FHA rules.
But a lot of them are on leased land.
That's unfortunate. I know. It's you can't get any mortgage, Fannie Mae, Freddie Mac, VA, FHA on a property that is not permanently secured to dirt they own.
Okay,
Otherwise, it's considered a mobile, like literally a mobile home, like an RV loan is what it
got it.
typically is, what it really is, because you don't own it. You can move that at any time, and the lender needs it to be bound to the property in order to insure it properly, and get proper title insurance on it as well. Because you literally have to go to the DMV for title insurance
Right,
and that's in it.
right.
Yeah.
Yeah,
So
know
it's more of
that.
an auto loan. I do have an outlet for that. I don't do it. I just refer it out. But there are quite a few that are in the lower price point, like under 100,000.
Right.
But they do have that rental space payment. So believe it or not, I've seen comparisons with doing a loan on a manufactured home on a rental space. If you do the loan plus you do the rental space, it's very similar to a mortgage. So we may want to talk to consumers about that and do side-by-side comparisons.
Got it. Thanks.
Yeah. Any other questions on this fantastic zero down program? I'm not going to toot my horn, but I am the king of FHA, and I can prove it. Go to kingofhA.com, and that's me. I may or may not have a few domain names, but kingofhA.com. Don't forget that. Who can, right? All right, so how to make the best offer, and I want to talk about the perfect pre-qualification. So we all know that buyers, they do their own thing a lot of times. They go to a bank, they get a quick pre-qual. They're like, well, I already have a lender, but what has that lender done to properly secure that customer into a mortgage? And what have they done to make that offer as optimal as possible? Is it always about the rate? Are rates the same everywhere? Like, what's the magic? Like, how do you help somebody get the best offer possible if they're using their own bank? Well, I'm going to show you how to teach them how to do it, but hopefully you'll use my model and what we do for that. But we need our customers to really follow our lead on this. If they want to get the home that they fall in love with, we need a really strong offer, especially as rates continue to fall. It's going to get more competitive because, as you saw from builders on the starts and the building permits, they are lower than expected the last few months. That's not a good sign for inventory. We are seeing inventory pop up, but it's going to get more competitive when rates drop. So let's have a look at how to make the best offer. First off, we have a $5,000 closing guarantee if you do this, by the way. But I want to show you what I do. So first off, when I talk to a customer, I don't just send them to an online application. I just won't do it. It's garbage in, garbage out. I like to do what I call my pre-approval consultation. We go soup to nuts through what they're looking for, what their goals are. If they don't have a budget, I talk to them about how to create a budget. If they have a budget, I ask them what their maximum purchase price for payment would be, not price of home, what their actual payment they want to get. And I'll talk a little bit about that in a second. Oh, heck, I'll just talk about it now. If I know what payment they have, we can look at strategies to do rate buy downs to get them a higher priced home, keeping that payment that they have for their budget. So if they give me a payment, I want no more than 2,500, Sean. I'll say, okay, here's 4 different price points that you can do, and here's 4 different structured scenarios on how to get there during the offer process. So we go over the pre-approval consultation, we go over all of their goals, figure out their life story, get the whole story behind the loan so that when we do the application, we are in a great position to know everything. So nothing is ever left out. No last minute, oh, didn't you know about this? That doesn't pop up. So I urge you to make sure that your customers are doing this. And oh, this is definitely out of order here. Personal loan application process. Again, I don't do online applications. I highly urge everyone to do it in person via Zoom or over the phone to get the true story, to get everything behind the scenes. It's very important, again, to create a bump-proof closing process, a nice smooth process. It's imperative that we do this and do it well. Now, we do a soft credit pull. I don't know if you know what that means or why that's super exciting. It's exciting to me, and here's why. A soft inquiry takes a lot of the fear and pain away from that soon would-be buyer from running. They think, oh my gosh, if I run my credit and get pre-qualified, my credit will drop. Well, when you do a soft credit pull, that goes away. It doesn't affect your credit at all. It doesn't even show up as an inquiry. So I highly recommend when you're talking to borrowers saying, you know, what's your fear of getting pre-qualified? I would say 90% of the time, I need credit dings. That's what they say. So they won't get pre-qualified. They want to drive with you everywhere because they don't want their credit dinged. This does not hurt their credit. We get everything we need to do a full underwrite with just a soft credit pull. And another key piece of this is I want every buyer to register for this. And I want you guys to write this down. Optoutprescreen.com. You may say, well, what is this? Did you know that Experian, Equifax, and TransUnion, when you do a hard inquiry on their credit, they will then sell all your information because it's flagged as a mortgage inquiry. It will then sell all of that buyer's information to whomever wants it. So there's going to be home improvement companies, there's going to be insurance companies, there's going to be mortgage companies, there's going to be, you name it, they will get bombarded with solicitations. So before we go into contract, because we're doing the soft credit pull, we can do this optoutprescreen.com to alleviate all of the crazy calls they will get. And believe me, guys, prior to this tool, people would call me in a panic, thinking that we sold their information. And I would have to explain, why would I sell your information to another lender, to an insurance company, to all of this? We don't do that. It's because Equifax, Experian, and TransUnion, they sell it. And guys, it can get really out of hand, the amount of calls and spam you get. So huge tip to keep that down to a minimum.
Wow, that is something else. That's really good to know, Sean. Thank you for protecting people like that.
Yeah, believe me, I just
Sean,
did a
if they
2
put
months
that
ago.
on, are you going to be able to pull a soft pull, or do you have to do that after you do the soft credit pull?
So the soft credit pull, remember, it doesn't flag anything. It's just like a ghost swept in, had to look at it and went out. It doesn't have any impact on it. So I can do a soft credit pull, and then they can still do the optoutprescreen.com. They can do the optoutprescreen.com at any time throughout the whole transaction, and lenders will still be able to pull credit. It just won't be sold when they do. So we'll still be able to pull credit no matter what, but they won't be able to sell. Sorry, I have somebody in the waiting room. They will not be able to sell that information to any third parties any longer. So there's a permanent process and there's a temporary process. The permanent process, you write a letter or write something, you send it in. The temporary, you can do it online in a matter of moments. It's really, really quite simple. You may want to add this to your buyer consultation meeting, saying, hey, during this process, we want to protect you from spam because there's a lot of really creative wire fraud out there. This will protect from all of that. So very good to have. Now, one of the things I do is a total cost analysis. So how many times have you seen a pre-qualification come through? You see a payment on there. It's from B of America, that's what it is. And it has a payment, and that's all it shows. It shows the mortgage payment, the PITI, but no details. Doesn't show cash to close, doesn't show anything. The customer's like, we're approved, yay, now what? Well, nobody knows really what that looks like until they get a complete closing or the loan estimate, which is 5 pages, hard to understand. So I do a TCA, total cost analysis, using separate software, and I'll show that in a second. And it's an in-depth review of the cash to close required, the loan program, a breakdown of the payment, what's included in the payment, so the expectations are set. Super important to do this. I'm telling you guys, it is a game changer for giving confidence to a buyer, and it takes a lot of fear away from them. So total verification and review of all income and assets. So what does this mean? I've been in the business now, this is my 25th year in the industry. I can't tell you how many loan officers get a pre-qual sent out, and then all of a sudden they see that everything's uploaded, and then they just change the pre-qualification to say we've received the documents and reviewed it, and they haven't even reviewed it. It happens all the time. Okay, I see it all the time. What I recommend and what I do is I verify everything with VOEs, verification of employment, with the employer if they're hourly, to make sure it's perfect. Because if they say they make $38 an hour, but they've been only working part-time for the last 30 to 45 days, that could kill the deal. So we do a full VOE, and we verify all of their income and asset documentation upfront through tax returns, through K1s, through you name it. We do it up front, and that's going to protect your paycheck, because there's nothing worse than going under contract, paying for inspections, getting everything dialed in, and then 2 weeks prior to closing, the lender calls you up. Oh, I'm sorry, they don't qualify. They're not income qualified. Like what? Like pre-approval. That means you're approved prior to making an offer. Not, I think it'll work. I hope it'll work. Let's throw it up against the wall, hope it sticks. That's the industry though. And that's what frustrates the heck out of me. And I fix broken loans all the time because of people that are getting, their expectations blown because this isn't done right. So total verification review and income asset documentation is critical. And Sandy Richards on my team, she's my assistant. She's a licensed loan officer. I've been doing this over 25 years. We work together up front to guarantee that. And it's fantastic. Now, if your customer doesn't have the best credit score, we do FICO Boost as part of the everyday process. Meaning, if they're at a 680 credit score, but they've got 2 or 3 items on their credit, keeping them from a 740, we can tell them exactly what to do to get them to boost up to 740 to get the best rate possible. So that's FICOBoost.com. Go there, FICOBoost.com. It's my website. It's a program. It's free. And we look at the credit. We give a full plan to get there, whether it's during the transaction or 6 months down the road, however long it takes. Again, I just did somebody 550 to 610, got them into a 0 down FHA through FICO Boost. It's a great tool, and it's free. And what else makes the perfect pre-approval? Full loan approval through underwriting. Now, this isn't just Sandy and I reviewing it like an underwriter would. This is getting the underwriter's absolute blessing on this and a conditional approval with conditions. So that means that we can work on the conditions, whether they're give me the most recent bank statement, and we can clear those conditions and get the file literally clear to close pending appraisal and prelim and insurance. We can do that up front, and we call it the platinum approval. We give you a certificate, and there's a $5,000 guarantee to the seller that if anything happens with the financing, us, the lender, we're going to write a check for $5,000 and give it to that listing agent. Now, if you have a listing agent that has buyers, would you want this protection? I would say yeah. So if you have a listing and you have buyers come in, let me tell my program to those buyers and cross-qualify them to make sure they are pre-approved so you're not wasting your time. Now, another part of this, if the buyer is putting 20% down which by the way, a lot of people are right now because they're transferring equity from one property to another, we can, before you make the offer, we can run it through DU or LP, which is Fannie Mae and Freddie Mac, and just those two. FHA and VA don't allow this, but we can run it through the system to see if we can get an appraisal waiver based on the offer you want to make. Now, let me repeat that. We can get an appraisal waiver based on the offer you want to make. Here's an example. If you're going over ask, to ask for closing costs, to pay for buy downs, and they're putting 20% or more down, we can do it to see if it gets an appraisal waiver at that higher purchase price above ask before you make that offer. So when you make that offer, you can waive the appraisal contingency, even if it's over asking, and move forward with confidence. So if you have a platinum approval, appraisal waiver, guys, that's a strong offer. And when you do make that offer, please CC me on that offer. I've been in the area a long time. I know a lot of the agents that are out there and they know me. CCing me on that, I will call them direct, talk to them about their offer, talk to them about the buyer, answer any questions they have, any fears that they have that they were going to share with the potential or the seller on the transaction, because we all know they do. They point out all the negatives to make an option with the different offers coming in. I want to call them to go over everything soup to nuts on how great that borrower is. I want to tell them I fully vetted it. I want to tell them it's all the way approved through underwriting. I want to tell them that I spent 45 minutes going over what not to do during the transaction, so they are confident knowing that this offer is solid. And we can close in 3 weeks. So maybe sooner, if 2.5 weeks, if all of the regulatory stuff, that's the waiting periods and everything. So that's the perfect pre-approval process. Now, screenshot this if you can. If they're not going through this process, if they're not making sure they're dialed in before you shop for them, be very leery of doing so and putting them in your car. Because it's hot out there. First off, I'm just kidding. It is very hot. But because you want to protect your paycheck, you want to protect your time. Your time is valuable. And if you're a listing agent, I would want every single one of those offers to look like this, because that'll protect your seller. It'll protect you, protect the time involved, and really help you guys move forward. So any questions on this with the $5,000 guarantee pre-approved home buyer program? Any questions?
This
Did
is
you have-
perfect to give them and then ask for compensation.
What was that? I'm sorry, say that again.
I said, this is the perfect thing to show our value, is to have a partner that does this. And then at the end, have to ask for our compensation agreement.
Yeah, I mean, what better way to make you set yourself apart by knowing you've got them covered? Everyone in this transaction, you have fully vetted, and it's like the dream team, right? You take the best of everything that's in the industry, put them on one team, and rock and roll. So that's part of your role, and buyers definitely need to understand that. Absolutely. So great point. All right, so let's move on to, this is the difference, just to kind of show you. This is a nice little, I don't know, snippet of the program. We do everything. Platinum approval is everything, all the way through underwriting, and you can lock the loan in prior to finding a house. So that's called the lock and shop program. If you are fully approved, we will lock your interest rate in. Now, this is a terrible idea right now because rates should be dropping, right? But when you saw rates at 2 and 3% going to 4%, we were doing this program back then, locking people in at 3%, and then they had 90 days to go find a property. Perfect program in a rising interest rate environment. Not so much now, but if you have somebody that's really scared about interest rates going higher, and it's illogical fear, then this would be a good program for them. All right, set clear expectations. That's what we're all about. We have to set expectations and make them very, very clear. So what I do, and here's a sneak peek at my total cost analysis report, and I may just jump in and show you the live version in just a second here, but this is available on their phones. So on the left-hand side, that's an ordinary estimate that's sent out. Lots of different numbers on it, no breakdowns. It's usually one rate option. Well, it's always one rate option. And in today's world, if it's a loan estimate, it's multiple pages long. I have a nice little system that they can watch on their handheld. And as I go through this with them, it's highlighting on their device, whether it's their computer or on their handheld. They can do this from anywhere, and I can walk them through all of the options. So here's what it looks like when they're looking at it. So I'll say, okay, Mr. and Mrs. Smith, here's the 4 zero down programs I told you about. Let's look at the pros and cons. And this is an item. Now, if I highlight one of these columns like I did here, it'll highlight on their computer as well. And I just go through everything. Zero down FHA, that program with the down payment assistance that I was talking about, your total payment would be $45.39. The Powerhouse 100 is a zero down, one loan for anybody. It's another great loan that I didn't talk about today. That one is fixed. It's one loan all the way to 100%, and you are at $42.11. The Home in 5 Platinum, this has income caps on it, but you do qualify, Mr. and Mrs. Smith, so I wanted to present it. This has a discounted rate, plus you get 4% towards closing costs. This is what that looks like. Notice your closing cost, cash to close number at the bottom here. And then if you're a typical home ready, let's just say you're a first-time home buyer, but you don't have any, your income is way above the average. You can't get any grant money, then this program would be for you if you wanted to go that route. But keep in mind, this rate right here on the home ready is much better than the zero down FHA, which is in the low 8s. So with down payment assistance, I tell this to people when they're looking at options, nothing in life is free. Nothing. If you're getting something for free somewhere, somebody's making it up and being able to pay for that, right? Nothing in life is free. The way that most of these down payment assistance work is they jack the rate up to cover them. So this one's 5%. This one is, remember, this has all of the crazy scenarios available. The Home in 5 Platinum is more of it's a smaller pool of people that can qualify for this program, but the rate is much lower. So we look at all of them, and then the Home Ready. So we look at all of them like this, and then we look over what the monthly payment difference is between the programs. And usually they go, oh my gosh, there's no way I'm going to do anything other than this program right here. And I say, yep, you make the right choice. And then we go through the payment breakdown. So they see exactly how the payment is worked out, the principal and interest, the second mortgage, because some of these have a second mortgage attached, the property taxes, insurance, mortgage insurance, and their total payment. So they understand how much they're going to be paying monthly. And then we go through an itemization of all of the fees and who's involved with the transaction. Now, all of this is available live, and I'm going to show you real fast what that looks like. Bear with me one moment. Where's my preview? Total cost analysis. It's going to look like this on their screen and my screen. So I'm in here. I'm going to say this is the zero down option. I highlight it. It's going to be highlighting on their side. And this is the zero down with the second mortgage. If you have a 600 credit score, this is the only program out of these 4 that'll work for you. This program, but it gets you into the home. This is the details. I'm going to go to more information, click here, and we're going to go over all of the different closing costs associated, or the payment breakdown associated. We're going to go over the closing costs. We're going to look at the absolute details of this to show you exactly where all the money's going. And we're going to go over, okay, and savings over a 60-month period, over 5 years. What does that look like? Now, what I'm doing a lot right now is if people are probably going to refinance in 2 years. So I'm going to go into this analysis and I'm going to change that to a 24-month period. And then when I go here, it changes to savings over 24 months. And I can see how much they're actually going to be saving in the next 2 years with each program. So it helps really people decide which program is going to be best for them and why. So phenomenal way of presenting. Now, once they choose a program, then we look at different rate options. What's it look like doing a buy down versus a normal rate? And we can really, really get creative. So super, super fun program. And I hope you guys, I don't know if you know that I do that, but that's the program that I use. So hold on, let me get back to my slideshow here. All right, so mortgage rates. Where are they and where are they going? So right now, here's the candlestick chart. We are right in the middle of this crazy, I don't know what you call it, tiered level area, this back and forth, so to speak, within this wide range on the Fibonacci levels. So you're looking at a very flat period. This candlestick right here is when we were expecting the employment numbers, the unemployment numbers to be higher, and it went above here. And then it just, when the congressional budget numbers came out, it just crashed. It went all the way back down. And then we regained it the next day. We do have some good information out there as far as data that's showing a little bit weaker economy. That's going to be good moving forward. So expect to see the Feds really digesting that data because they are data dependent. And then here's the overall. I'm going to show you this. This is what I call a squeeze play, okay? This is showing what the bond market high and up here and the low has been. And notice they're converging. They are coming down. So there's going to be what I call a breakout session where at one point it's going to be squeezed to go one way or the other. Now I'm hoping in the next month that's going to squeeze us and push, and rates can or the bond market can break north of that. and we can see mortgage rates get better. So we're squeezing into this. It's going to go one way or the other. But it's an interesting, if you study candlestick charts, this pattern is very interesting because it's going to do one thing or the other. And usually it's in a pretty big move. So here's the mortgage rates right now. So 30-year fixed, we're right around 7%. Again, credit score, down payment, property type, occupancy type, location, all of this has a bearing on the interest rate. But this is just an average based on the perfect borrower, 30% down, 780 credit score, you're going to get a 7% rate. Anything other than that, it could be higher. And so you look at a 15-year, 30-year jumbo. So rates are better than they have been, but they're still not good as they can be. So FHA, notice that FHA, but FHA does have a very expensive mortgage insurance premium. That's 1.75% of the loan amount. That is a closing cost, and it's added to the loan. So it may look like a good rate, but there's on a $500,000 home, that's a $7,500 fee that's added to the loan. So sometimes, even though the rate may be better, it may be better off to do conventional to avoid that big fee. And then obviously VA is in that same world. So that's today's update. Let's go into what's happening this week. Consumer confidence coming out tomorrow. We have Case-Shiller Home Price Index. So watch Diana Orlick tomorrow. It's going to be interesting to see what she has to say. She's always very negative. We do have an auction tomorrow. We have an auction on Wednesday as well, and new home sales. These auctions, that's how the government raises money. So if these go poorly, which they may, because of the announcement that the Congress has a bigger deficit, they need to sell more treasuries, we could see rates deteriorate. So I'm going to be watching that carefully. Continuing jobless claims on Thursday. We have GDP on Thursday, and more treasury auctions on Thursday. And then PCE, personal consumption expenditure inflation numbers coming out on Friday, as well as personal income, personal spending. This day should be good for us. So we'll keep an eye on Friday. And that's it.